Thank you for joining us at xm.com. This is the weekly outlook with important data releases coming up and 2 central bank meetings. This upcoming week promises to be very exciting for markets. I'm Christina Marujos. Helping me unfold this week ahead is our lead investment analyst, Rafi Boyajian. Rafi, the United States entered a technical recession yesterday, as the GDP data suggested. Therefore, Friday's NFP report is all that more crucial. So what can we see in the data, and how could the dollar perform?
Well, indeed, Christina, after that GDP data, we now know that the US is in technical recession. The Fed would probably disagree. Powell, in his press conference after the FOMC meeting, did say that he doesn't really see a recession because many parts of the US economy are still growing. So recession is, according to his definition, is a broad-based decline in economic activity. But of course, recession fears do remain extremely heightened at the moment. We also did get that flash PMI data showing a surprise contraction in the service sector in July, and that's putting a lot of focus on next week's ISM PMI numbers. And in fact, these might be perhaps a little bit more important than the non-farm payrolls report because these surveys are a bit more forward-looking than the historical labor market data. So the ISM, the forecasts for both the manufacturing and non-manufacturing PMIs are reading above 50. According to the forecast, the US economy is still growing. So any negative surprises in the data would indeed, fuel those recession fears and perhaps lead to a further decline in the US dollar, which has been on the back foot following the Fed meeting. But even for the jobs report, I think the risks are to the downside to the data. The forecasts are that the US economy added around 250,000 jobs in the month of July. Maybe that is a little bit too optimistic because from the earnings, we're getting the earnings reports. A lot of companies are saying they're either freezing hiring or they have even started to lay off some staff. So I think we could potentially see a much weaker NFP report this time around. And again, that could lead to further decline in interest rate hike expectations by the Fed and further pressure the dollar. Having said that, the dollar is still, of course, the market's favorite safe haven currency at the moment in this particular environment where we've got both geopolitical and economic risks. So any decline would probably be limited.
I see. Let's turn to the central bank front. The Reserve Bank of Australia meets early on Tuesday, where there is speculation for an even more aggressive 75 basis point move by policymakers. Do you think that's a valid possibility?
I think those expectations have come down now a little bit following the Fed's hint that it might slow down its rate increases in the coming months. And of course, from Australia, we did get somewhat softer than expected CPI numbers for the second quarter. But nevertheless, I think the RBA was a little bit late to the game in terms of starting to raise interest rates. So even though they will most likely raise rates by 50 basis points in August, I don't think they would remove the option of 75 basis point rate hike off the table, and we may even get the statement or Governor Lowe in his press conference might even suggest that. If we do get a hawkish rate hike on Tuesday, that could potentially lift the Aussie a little bit.
Turning to the Bank of England, it also meets this week, and markets can't rule out a bigger 50 basis point rate increase, especially since the latest data don't indicate the UK economy is in contraction. How could the pound move?
Well, the Bank of England has, I think we've heard quite a bit from Governor Andrew Bailey suggesting that they will certainly be discussing a 50 basis point rate increase. So there's a strong possibility that they will accelerate their rate hikes. Of course, up until now, they've been raising rates by 25 basis points only, even though they've raised rates at every meeting since December. So given the small hikes, they are a little bit behind other central banks. And recent data has actually been rather better than expected. The labor market remains tight. In fact, it's still adding jobs. The PMI data, even for the July flash PMIs, we didn't see a contraction in the UK, even though we saw it in for the Eurozone and for the US. But more importantly, inflation is still heading higher. It's expected to soon reach double-digit figures in the UK. So the Bank of England will probably want to step on the brakes a little bit harder in August. I think the bigger question is, even if they do go for 50, are they going to signal more big hikes later on? So that's probably what's going to affect the pound more on Thursday. But even still, if everything goes as expected, the pound should remain well supported from this hawkish shift by the Bank of England.
And finally, let's turn to the data again. We'll be getting employment data out of New Zealand and Canada this week. How could their respective currencies perform, especially when we're talking about the loonie, given also we have an OPEC meeting coming up on Wednesday?
Indeed. So the OPEC meeting will be in the spotlight because, of course, the cartel is under a lot of pressure from the US and other countries to boost output. Now, looking at the data first, I don't think that it's going to be that significant as far as rate hike expectations for the RBA and the Bank of Canada are concerned. I think both central banks will probably raise rates by 50 basis points again at their next meetings. I mean, this would be, of course, a slowdown for the Bank of Canada, but given following that 1 percentage point increase, 50 basis points is still pretty significant. Both economies are really hot right now. They've got hot property markets, hot employment markets. So even if we get some disappointment in the jobs data, it's not really going to alter the outlook that much. So the loonie might really here be more affected from this OPEC meeting. Now, OPEC doesn't want to say that they're actually about to announce a big increase in output, and it's questionable whether they will. What we might get is perhaps a symbolic increase just to show that they are doing something to help alleviate this surge in oil prices and to kind of please the United States. So a small increase in the production quotas on August the 3rd from OPEC Plus would probably not make a dramatic difference in oil prices. But any big surprises in terms of big output increases, that could pressure oil prices much more.
Looks like it's going to be another interesting week. Rafi, thanks so much. This was the Weekly Outlook here at xm.com.